Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 305 for July 19th, 2021. We've been off for a couple of weeks for 365 and for market holiday, but yeah, we're back today, and we are recording this live at 1 p.m. Eastern Time, and we're ready to talk about the markets. So my name is David Kosmeter. I'm the creator of TimingResearch.com, and today I have arranged for John Nyaradi to join us. It looks like he just logged in. John, you there? Okay, I think John's here. So also Michael Filighera, Sonny Harris, and the option professor to moderate. So I'm going to go ahead and turn it over to Jim.
Okay, great. Well, we certainly got a wake-up call today, so you didn't need coffee to get excited when you looked at that board here today. We have three fantastic guests that are going to give their insights into what's going on. And we have some questions from the crowd here, 4 general areas, and then about 6 specific stock symbols. So we're going to try to get into that as well. And then at the end of the broadcast, the guests are going to describe what they're going to be covering this week when we go and talk about favorite indicators. But we're going to wait for that to the end, because they're just going to give you a taste of what they're going to cover during their broadcast on the favorite indicators. Today, we're just going to try to stick a little bit towards what the specific topics that the audience was looking at. Before we get started, we've got John of TradingGods.net. We got Michael of LogicalSignals.com, and of course, Sonny Harris of MoneyMentor.com. So we're going to start out as they are in my order here. John with TradingGods.net. A little background on yourself and a little bit about what you're doing at TradingGods.net.
Oh, thanks, Professor. Appreciate it. Always nice to chat with you. And David, thanks everybody for joining us.
Yep.
So we're doing option trading mostly. We call ourselves retirement day trader, and we do credit spreads and debit spreads, looking for income and profits. And that's our main focus right now, has been for quite some time.
Sure.
And so exciting times. Obviously, you mentioned a little bit of action this morning. We started the kind of the broader, 30,000 foot view of what's going on. We can talk about that a little, and then drill down into, specific shorter term type things.
Sure. Sounds great. Michael, LogicalSignals.com. Again, many people are aware of you because you've been on very often, but
Yes.
For those who are not, a little background and what's going on at Logical Signals.
Sure. Again, my name is Michael Filighera, and my background is that I've been trading professionally since 1979, and I've been an options market maker here on the Pacific, also on the London traded options market, the Amsterdam European Options Exchange, the German DTB, and then I came back to the United States, and I came back to the Pacific, but in 2001, as things were slowing down and going more electronic, I left the floor, I came home, established myself in my office. It took me a good 10 additional years, but I did switch over and decided that I would concentrate and focus on futures. And that continues to be what I do. And right now, what I am doing is that I have a trade room. And in that trade room, we are day trading the NASDAQ and the S&P basically right now. I look to add some additional markets, but right now they're active enough, and looking to expand on that, and also to work more on my coaching.
Okay, perfect. Sonny Harris, obviously your experience is tremendously diverse and wide, but just briefly, a little bit about it, and also, again, what you're doing down there at the MoneyMentor.com, which you do a lot of different things for people.
I do. I'm a mathematician by training, trader by choice. I've been trading since not as long as you, but I've been trading since 81. I retired in 81 and did what I thought was the right thing. I gave my money to professional traders, money managers, and it took them 3 weeks to lose 50,000. And then another 2 weeks to lose another No, they lost 75,000 the first 3 weeks, and then another 2 weeks lost 50,000. And I decided that I could probably do that badly on my own, and so I struck out. And I've been trading ever since. I started trading the big boy S&P back in those days. It was $50,000 margin at the time, and was short the crash of 87. So that was pretty exciting. And I decided, well, if I could do that, I could do anything. So I've been making mistakes ever since.
All right. Well, we'll get into a lot of different things that you're doing as well. But right now we're going to start out and just do some discussion on the market, generally where we are right now, because let me just market's been moving so fast here. On Mondays, we generally go over just opinions and guesses where you think the market may end by the end of the week. So today we did open up at 42.96. I got the S&P, I'm looking at SPX, and it's around 42.45 on my screen. So we've dropped about 50 points off of the opening. Do you guys think that we will be higher than 42.96 by the end of the week, or will be lower? We're going to start out with John, higher or lower, and your confidence level.
I wonder if you put the Bollinger Bands on that chart, that would give us kind of a little bigger picture of what's been happening here. Thank you.
Of course, if you think it's going to be lower, you have a 50-point head start because it's 42.96. So, yeah.
So if you look at this chart with the Bollinger Bands, this thing has been, pretty much tracking the high end of that Bollinger Band all the way until just a couple of days ago. So we were definitely due for, just a kind of a run-of-the-mill reversion to the mean kind of trade. I think that's what's happening right now.
Right.
And you can see us down on that 50-day moving average pretty much. So, and we're coming down to the lower end of the lower Bollinger. So, my guess would be, unless this is the big one, it'll bounce off the lower Bollinger here, right about where we are, and finish somewhat higher for the week.
Okay. And your confidence level would be?
Yeah, I'd say relatively high. We can talk about kind of the bigger picture things in a minute, but for today, that would be
something like 60%.
Yeah, 60, 70%.
More likely than not. Yeah.
Yes.
Michael, what are you thinking here as far as where we're going to be by the end of the week?
By the end of the week, I actually think that we will be higher.
Yeah.
I think we will be hopefully back above 42.90. I know that's quite a stretch from here, but what I want to make a remark on is that, people say, well, oh my God, that's 60 S&P points from here. And it's like, really? It's moved 83 today.
Yeah, right.
So all things are possible. What I've been viewing this is that off of that high at 43.80, 4.75, the market needed to do a little bit larger correction than what we've seen. And those that follow Elliott, they understand that a corrective move is going to come in as an ABC. And we did the A and the B, and that formed a box. And then we started to drop in the C wave. And that's actually the wave that is extending. Even on an Elliott basis, it's extending. And we're now just finishing what I am looking at as the third wave of C. So we have a little bounce in wave 4, another decline in wave 5, and then it'll be off to the races. And so I think we still have a very, very large rally to finish a much larger move that's been in progress for many more years than many of us have been trading.
But the question was, by week's end, you think we'll be higher?
Yes, I think it'll be higher.
And then what about your confidence level?
I'm going to go 50-50 because that's what the market is telling me. Don't go more than that.
Okay. And I would note that the VIX did jump up to 24.78, which it has not been able to sustain that 24 area very long in the recent past. So it'll be interesting. The other thing that looked interesting, if you put those Bollinger Bands back up, is that it looks like the day after we have the big red bar coming down, when it has held the Bollinger Bands. Can we get the other one that was just up?
The S&P.
Oh, you mean the back to the S&P?
Yeah, the Bollinger Band. Yeah. If you notice that every time it's come down to the bottom of the Bollinger Bands, the next bar is green. So I would suggest that just looking at that history going back for a while here, tomorrow had better have a green bar. And if it does, then you've got a reasonable expectation that maybe today is a low point of which to trade against. So
Yeah.
I think tomorrow and turnaround Tuesday is a pretty good day to see it. But if we saw another red bar way down, then of course that would be more concerning, right?
Mhm.
And then it corresponds also to the VIX being extended, jumping up as much as over 30% today, which is generally a panic signal that probably was evident on these other big red bars that are down near the bottom of the Bollinger Band. So I think tomorrow is going to be a big day as far as you definitely want to see some stability here. Sonny, what's your feeling here about between now and the end of the week?
Well, I'm interested in the fact that it's not trading on high volume today. I mean, we're making a significant move down, and I predicted that in my Sunny Side of the Street newsletter yesterday that we were going to be down significantly today. But I think we're going on the Dow. I'm looking at not the S&P right now, but I think we're going on down to 33, right at 250, which will be break that 50-day moving average and break the Bollinger Band.
Right.
And I think it's going to scare everybody, and then the smart money is going to come back in and pick things up cheap.
Yeah.
Yeah.
And that also would take out the 50-day moving average on S&P, which comes in at
Yeah.
42.39, which it hit today.
Mhm.
But you think it might try to give a little scare tactic and get it underneath that for a little while to get
Yeah.
some of those stops running, et cetera.
Well, I think it's interesting. I don't think the S&P is going to go as far down as the Dow is.
Right.
Do you guys are thinking any weight that the highs are in?
No.
Mm,
So you
No.
don't think the 4,400 area ballpark figure is going to be the high point for a while?
No,
No.
I think we're going significantly higher.
Okay. All
Agreed.
right. And again, if the variant scare goes away, then obviously I think you probably will be right there. All right. Well, let's go over and look at some of these things that the attendees wanted to talk about. The price of gold. We have gotten up to 1920, and now we haven't been able to hold it. How do we feel about gold and oil? Oil obviously is losing its altitude as well. So let's start out with John and get an idea of what you think 3-month outlook is on your gold and oil. John? Trading gods?
Hey, John, you're
Yeah, I had to unmute myself. I apologize. The old mute button trick. So I apologize. Okay.
Kind of like the guy in Workday commercial, right?
Exactly. Right. We were doing this work from home thing for so long, right? You'd figure you'd have it figured out by now, but I'm in meetings all the time and everybody's on mute. They're talking to themselves. So, I apologize. So gold, you look at those charts of gold, they're just sort of scrambled at neutral. I don't see any real direction. I think, in my view, Bitcoin is the new gold. It's the millennial gold. Gold is for old guys like me. Bitcoin is the future. And so I would be watching that more closely than gold.
Okay, so you're not so keen, and basically your answer is in the next 3 months. Right now, you're not so keen on the gold.
Yeah, and oil, obviously, it's looking pretty weak daily and weekly.
So right now, you're not too keen on either one of them.
That's correct.
All right, going over to Michael. How do you feel about the gold and oil?
I don't really follow oil that much, but I do think that it reached its high for at least the near term to midterm. I think that it could continue. Look at the way it dropped below that 50. That's extreme negative. The bar is entirely negative, but it's all news driven. And we've seen where, OPEC says one thing one day and come back to the next day and say, oh, well, really didn't mean it. And then they'll just put this all back on. But I do think that it should continue lower. I think it's just because it gets back to the longer term trend, which I think is still down. Gold, on the other hand, is doing quite well to hold itself above 1,800 right now. I'm looking at an hourly chart, and I actually want to go out a little bit further to a daily. And on the daily, I was anticipating that the market would kind of top out above 1,900, and it did, and then it started lower. That pattern, this first leg down to 1,750, which took us to the end of June, is 5. So an Elliott 5, the rally back up is a 3. That is pretty clear. We may have continued upside, but it's going to have to really work its way above 1835 if it has any intention to getting up to the next level, which is 1855. I don't see that right now. But as I say, stranger things have happened. If it holds at 1835, then its next stop would be 19, 17. Oh boy, that's about 140 points. It's actually going to drop back below 1700 and down to the mid 16s.
Yeah.
Before all is said and done.
You follow the moving averages. I have a 20-year graph and I have a 1, 2, and 3-year moving average. Then the 2 and the 3 are underneath the market still. But the 1 year was at about 1835 and now it's rolled over. So it seems like if it cannot get above 1830, 1835 and hold there, the idea of 1950, 2000 is totally off the table.
For right now, yes.
Yeah. Well, I mean,
I agree with
we're
you.
only living right now. If the
Yeah.
prices change, then we change, right?
That's true,
Yeah.
but I would say it's off the table for right now. But a lot of people, if they're looking at gold, and they might be thinking longer term. So I think it's
Yeah.
like that's why I try to
Well,
quantify what
yeah.
what we mean by off the table. I agree with you, but I think 1575 is where I'm looking at my maximum monthly, which goes back to 1978 to current, and I've got a 50-day moving average, and then at 1575. That fits very clean, more cleanly into my picture than much lower. But my 200-day is at 1212.
Wow.
So
I don't have
both
anything
of
that
those.
even sounds like that one.
Well, again, the chart, the length of the chart is 40, 45, 50 years.
Oh, I got you. The three levels that I'm looking at, tell me what you think of these levels, because just throw in my own 2 cents. 1828 is my 1 year, 1722 is my 2 year, and 1577 is my 3 year.
I like the 3 year.
Yeah, the 3 year is really the big line in the sand that you would not, if you're a long-term holder, you don't want that taken out.
No, but even if you're a long-term holder, it depends on why you're holding it, because I think that you can continue, and this is your forte again, Jim, you start protecting. So
I would be protected right now, frankly.
Exactly. I agree with you. I would be protective right now.
Right now.
And either you're setting some puts underneath that.
Yeah.
But if puts are expensive, you got to work something else out so that you take advantage of the volatility.
Yeah.
And then still protect yourself for downside. So yeah.
All right, Sonny, I don't know that you're such a gold bug. I haven't heard you really talk much about it, but I'm sure your analysis can be used on any market. So what are your tea leaves talking to you about as far as the price of gold?
Well, that's
and oil, yeah.
I don't really follow oil so much,
Right.
but I do follow gold. I like gold. I think gold's going to take a dip. It's got that C wave to finish.
Okay.
And then I think it's going to go on back to 2000. So I'm in disagreement with the other folks.
Yeah, no, well, the thing
like
is they're printing money. So the idea, and like we were saying, the 3 year moving average is rising, albeit it's way underneath. But with regards to the down move, where would you say it might stop? Do you think that 2 year at 1722 might be as bad as it gets, or what are you thinking?
I think it's going to stop at 1655.
Oh, I got you. So it's going to bust through the 1 year and the 2 year, get everybody out. And then basically it'll not take out the 3 year.
Mm-hmm.
And so that will be the neighborhood where fear is great. The long-term average is still intact. And that would be the bargain.
Right. And it always seems to surprise, the market, any market seems to try to surprise the weak hands,
Yeah.
Yes.
And like I say, that low at 1675 that it hit, you're saying it might take that out, and that would pretty much get a lot of the stops out of the market as well. And would really
I've got a low of 1678 showing on my weekly chart, and and then I've got what I call attractors is at 1650. So I think it's going to bounce off that 1650 and surprise everybody. I still love gold. I mean, it's nice to hold a gold coin in your hand.
Yeah, it is. I agree.
No, it is. There's no doubt about it.
I've got a gold coin that I have on a necklace, pardon me, that my father gave me about 50 years ago.
Uh-huh.
And it's really cool because I got this necklace with, it's $1,800 on a necklace.
What kind of, is it a US coin? Because I used to like the Mexican 20 peso. I always thought the Mexican
Yes,
20
I
peso was,
have a lot of those too.
yeah,
But
they're
this
a good
one's an
looking
eagle.
coin. Don't you think? They have the Aztec
beautiful.
calendar on one side. Yeah.
Oh yeah, they're beautiful. All the gold coins are beautiful. I have maple leaves, I have Krugerrands, I have the eagle.
With regards to the oil though, no real opinion.
Oh, I think oil, I'm looking at a long-term chart of oil. Looks like it's getting, again, I call them attractors. This is a horizontal line coming off June. Looks like it's probably stable right there.
And so you, what price are we talking about stability coming in?
I'm looking at Brent right now, and I'm.
Oh, Brent.
Yeah, BZ.
Are you going to go over to England and get some Brent crude over there?
Well, it's the thing I had up. So
let's see what Brent looks like. I don't really. I mean, I'm sure.
Which one
obviously,
which one?
just
would you like?
West Texas Intermediate.
How about light sweet?
Yeah, light sweet West Texas Intermediate.
Yeah, I've got
the one that's going for about $66 right now.
Yeah. Let's see. Was on the line where? It still looks like that's a holding spot to me.
So, I mean, are you thinking it might be stable between 60 and 66? You think there might be some stability there? Yeah.
I think there's some stability there. Yeah. It's going to be really interesting to see what crude does as more and more electric cars come on the market, and as Tesla creates more of its self-driving cars and people get excited and buy them. What are we going to do about gasoline? Gas prices and crude prices when we no longer need oil as much. That they could either raise the price because they don't have the profits anymore, so they're going to make the profits through raising the price, or it could just dry up, so to speak.
Yeah. They're saying that the supplies are supposed to be very tight all the way through next year. So if we get through this variant,
tight.
Yeah. Oh, yeah. But maybe they're trying to make, like you were saying, if your future is going to be that this product is not going to be used as much, wouldn't you make hay while the sun shined, right? And try to get as much as you can while they need it, right?
Absolutely.
So that might be the whole theory behind that.
The recovery from the COVID lows has come about with everybody raising their prices to try to make up for what they lost in 2020.
Yeah. And private equity is not dumping money into it. So the new supplies are not coming on because everyone is, first of all, they took a big whack when it dropped down to $10. And secondly, they don't want to get another whack in the head when it becomes obsolete more,
Right.
Yeah.
All right, let's switch to question or area number 2, ways to hedge if puts are already expensive. I have a couple of things I'll throw in the ring, but let's start out with John. And John, if you want to hedge, but obviously a day like today or whatever, obviously is like buying fire insurance after the blaze is hit. If puts are relatively expensive on what you're doing, what would be ways of hedging in your view?
Well, puts, you got to pay to play. So I think that still would be a primary option, so to speak. We have a lot of options, right? Yeah. And then you being an option person as well, a bear call credit spread would be an option, or a bear put debit spread. You could do a directional play to cover some of those things. So you have about 3 different ways to go. That's the thing about options. There's just so many different things you could do. What's your view on that? I'd be interested to hear you.
Well, I mean, I would either look towards the collar, since the upside doesn't seem like much of a risk right here. So find a price you think it's not going to get above for a while, take that premium in and buy your insurance with the premium. Or again, you spread them out when they're heavy. So you have the writing situation working for you to lower the cost of the whole thing. So really, you don't have too many options if you don't want to do things when it's the right time to do them. The right time to buy insurance is when the market is up higher and you have something to protect, not after half of your house is burnt down and you're trying to get the State Farm guy on the phone,
Right.
So bottom line is, you are dealt the hand you're dealt with, which is right now a high premium situation. And if you just buy the puts, that deductible is pretty heavy. So I don't know how much insurance you get if you pay $50 for a put. You know what I mean? So anyway, the collar kind of takes some call money and helps you pay for it, or the spread takes some out of the money put to pay for the closer to the money put. And
Mhm.
those are two alternatives, but neither one of them are fabulous because you're selling calls after the drop, which is not Phi Beta Kappa. And then spreading them, is an alternative, but not a great one. But anyway, that's about it. There's so many different things you can do. Let's hear what Michael's got to say about what other ways you think you'd try to hedge.
If the puts are expensive and you still want to take advantage of the premium, the volatility, sell puts and sell the underlying.
And
you will make money on via theta. And if say, for example, if you're trying to sell something in the S&P and the S&P is trading at 42.29, and right now you're just looking to put some puts underneath it, then I would sell instead of buying the puts because there's too much premium. Sell the stock or the S&P, and if the market moves down, you're going to pick up the premium's going to help you, and then you're going to get to a point where you can either buy calls because you're getting too short, and then sell more of the underlying. If you're continuing to feel that the market is unstable and is still going to continue to go down, otherwise you reverse the position.
You're making a good point that I didn't make, which I was thinking of, and that is, it's all according to how much pain you think is in your trade. I'll give you, for instance, there was a lady who was in AMC, and the stock was up at 60.62, and she had bought it at 30. And so we went over some numbers of sell out the stock. Let's say you had 1,000 shares, so take 60 grand off the table, and then take 5 grand out of the 60 and buy a spread of calls at 70 and sell the hundreds. So that was going for September for about $5. That would allow her to make another 25 grand or so if it goes up to 30. I mean, it goes up to 100. But if the thing falls apart, like it's at 32, she's got 55 out of the 60 grand in her pocket. So that's a replacement trade where you say, you know what? I just want to have a hedge in case this thing goes back up, but I don't want to be on the Titanic because I don't know how low is. We're all saying we hope it stops tomorrow, and we hope and hope and hope, but you might not be in a position where hope is a strategy.
Right.
And so therefore,
that's why I agree.
You call off your dogs if you think that you have no idea where this thing might stop, if you're in one of those kind of stocks, and you replace it with a call spread or calls. And then if the thing does reverse on you and goes through the roof, you still have a position that could benefit. But then when you go to bed at night, you don't have to worry about AMC is going to open up at 16 because they finally looked at their balance sheet,
Or the Reddit people finally looked at their balance sheet.
Right. And exactly. There's only so much pain that the apes can take at some point.
Yeah. Which is why I think it's like when people start mentioning that premium, the premium's too high. It's like, well, then take advantage of it. Yeah. And here's how you could do that.
Yeah.
And
so the replacement trade makes an awful lot of sense in certain circumstances. And the one I just showed you with AMC, the AMC idea was obviously a gem. But, that's not always the case.
But the thing is that, as you're saying, the replacement trade could be a very good, but what it really does force the individual investor or trader to do is now you're going to have to trade your position.
Well, you can, if you go out 6 months, you don't have to trade it. You can sit there like Buddha and hope it goes back up. And at least when you go to bed, at night, rather than like in the example, you have 5 grand maximum risk. When you went home and you kept the stock at 60, you now found out you have $28,000 of risk.
Right.
Now you can hold on to this.
I agree with that. I do agree with the background on that type of a trade.
Yeah. And if it does go down, you have all that other money to come back in if you really think you got a gem that's just on sale.
Right.
So,
right. Agreed.
It's not terrible. Anyway, Sonny, what do you do when it starts raining? Sonny, what do you do when it starts raining? That's a good one,
huh? Say thank you to God for having some rain in Southern California. That's what I do.
Or if you have a lot of cash, you thank for the bargain.
Yeah.
If you have a lot of cash, you thank for the bargain that's available, right?
Yeah. I mean, every time Tesla goes lower, I buy more. When I see a bargain, I stock up.
Well, your idea of hedging again would be this, in that you'd have your asset allocation set up so that you do have cash, so that if it does come up, rather than worrying about protecting a loser, that's something that's not working, and trying to fix something that's not working, You look at things that you think are ultimately going to work, and you take that sideline cash and start employing it.
That's exactly. Well, thank you for saying that for me.
Yeah. Well, because I'm, like I say, I'm hearing you, and I just want to make sure everybody else is,
Yeah, I don't trade options. I found out many years ago that I could
Yeah.
lose really well with options. So
Yeah.
I just trade the futures.
The problem is if you're all in, then you don't
Ah.
have any cash to take advantage of it. So
Right.
really, that's the flaw in your portfolio is
Yeah, but
your
I'm
asset.
never,
Yeah.
yeah, I'm never all in. I've always got something else left on that I can put on the table because I believe in taking profits.
Yeah.
Mm.
Yeah. All right. Well, the next one on the docket here is the dollar index and the 10-year note. And we know the dollar has been rather firm. I wouldn't call it really strong, but I would call it firm. And then basically we know that the 10-year note has been a big money maker because yields have dropped from the 175 area in March, and we saw under 120 today. So got a big winner in the Treasury note and a stable situation in the dollar, basically. But what do we think about them right now, starting with John?
As you mentioned, both are bullish, Prof. Just looking at the charts, that's clear to see, and it's pretty black and white.
Yeah. So you're constructive on both at this point in time?
Yes.
Yeah. With regards to Michael, any feelings on the US dollar? And I mean, we know it's at 92.93, and we know it held the 88.90 area. But
Right.
what is going to happen in the weeks and months ahead, I guess, is what the question is going to be. And what do you think these interest rates? They're down at 119 to 121. Are they
Yeah.
going to remain down, or what's going to
Tough
happen?
call on
here?
the interest rates, because I think what we're seeing over there is a flight to, I'm going to use a bad term, but a flight to quality. When people are getting a little bit afraid of what's happening in the equity markets or even some of the other commodity markets, they're going to stick their money where they get some kind of a return, and that right now are bonds. And so, but once that veil is lifted, and we say the stock market or the equity markets turn back around and they start heading higher again, and they're making it very clear we're going to new highs all over again, we're going to see them bail out of these bonds and all have to reverse their positions yet again. So I continue to think that the dollar will remain in a bullish pattern, because I actually do believe that the inflation is real and it's not going away. And while I have confidence in the Federal Reserve to try to put an attempt to put the brakes on it, it's like, give me a break. It's not going to work. And so the real question then will become, how long are they going to be able to hold out without starting to raise rates?
Well, if the stock market keeps dropping, they're not going to be raising anything.
Well, I
Yeah.
don't, but still, we're still in
Yeah.
the froth level here of the stock
Yeah.
market. It's
Yeah.
frothy.
Yeah. And like I say, the consumer, are they willing to pay these high real estate prices? Are they willing to take all the pass-throughs and pay high things? And, right now they seem to be doing that. But, some people think the inflation is going to go away when people go back to work in the fall, when the bottlenecks are solved. And what do you call it? And I forgot the other thing, but they are thinking there is a transitory aspect. So
But I think that's a hope of women, a prayer.
Yeah.
Because the reality tells us, I mean, it's like, I think it was Sonny that made this statement, that inflation is real, basically because they weren't allowed to raise their prices during the pandemic. They weren't allowed to battle their own way out of the holes that were being created because of what we went through and everything during lockdown. Well, now they are, and the consumers are definitely on the front line of feeling that. And so, how much more do they want to take? So, but because what people, I see here it is, and I'm going to show my age. I think people need to go back and review what was happening in 1980, 81. And start looking at Paul Volcker's work back then, because inflation was very real and it got out of control. And the only way that he could stop it, because the You know, the Fed basically failed at that point by not controlling it, even though they thought they could. And so what was the answer? You saw the prime rate go to 18%.
Right.
Now, are we reintroducing that type of a scenario? Maybe.
Yeah, I mean, you would never guess it, but you know, who knows?
Oh,
Yeah, Sonny.
this is really the $64,000 question here. What
Yeah.
is going to happen, and will
Yeah.
the Fed be able to be right? And they never are generally.
Yeah.
Will they be able to contain it? And if interest rates go up, this game is over. I mean,
Well, they're starting at 10 trillion almost on their balance sheet. So I don't know what kind of stimulus they can go from here. But
Exactly.
I wanted to ask Sonny something, because Sonny does follow the Kathy Wood people a little bit, you know, and again, her idea about inflation is that the workers come back in the fall, supplies are replenished, and technological efficiencies will keep prices down. And so inflation will be transitory, she thinks, because of those factors. Sonny, do you kind of subscribe to that thought, or what do you think?
Yeah, I do. I think we're going to have some inflation, because we've been having some inflation since March of 2020. I mean, we had COVID price gouging, and you couldn't find toilet paper no matter how much you wanted to pay for it. So I think, though, that inflation is going to cool down a little bit. I don't think it's going to go back to the 1981 level. I remember getting 18% on my treasury bonds at the time and thinking that was fantastic. I got this great interest rate, but at the same time, I was paying 70% taxes.
Yeah.
You know, so
yeah,
I wasn't making more money then than I am now.
it's a different world. And again, there is no way the stock market could sustain that kind of a yield advantage in the bond market.
Yeah, I don't think that's going to happen again.
No,
because everybody's going to want to short stock and get paid the short interest.
Mhm.
yeah, no, that's like I say, anything could happen, but that doesn't sound likely.
Well, and in addition, we're right on the edge of a rebellion from half the country anyway. So
Exactly.
I think something like that would really spark a big rebellion.
What can we throw the Japanese yen up there? Because I know some traders that are long the yen, which seems like it's the one-eyed man in the Valley of the Blind here. Let's just see what let's see. I mean, you know, the guy's a sharp guy who's along the yen, and he's making money on it today. So I'm not going to debate him. But yeah, can you see? Well, I guess it's got a red bar there, but if it got a green one and got above that line, is there something maybe it could happen? I guess I don't know. But
why do they feel that they're bullish on the Japanese yen?
Yeah, because I don't know why.
Japan's done such a better job at inflation than we have.
Yeah,
I don't know.
Well, it looks a little bit like it did back in April or something, when it kind of got a little bit under the line. So if the next bars are green and gets back above it, I guess I would join the club. But yeah, you can see here it's a much better looking graph, you know, as far as that's concerned.
Yeah.
The other thing I was wondering that might be interesting is if we could get those Bollinger Bands back up there, and if we could get an idea of what the S&P did on the day after these drops. You see what I mean? Like, what does this give us? Like when the last two times it was violated here, like 3 times. You got 3 times right there since well, this year it was violated. So if we put up an S&P graph.
That is the S&P.
And we get no, I'm saying like where we can see the prices a little bit easier and get an idea of what, you know, did it make a much lower low the next day? And did it close higher? You know, was there any price, shall we say, circumstances that could give us a tip for tomorrow that if it holds the low and then closes a certain way, it might be giving us an indication? That's what I was trying to
tell you what I used, if I could interject, for trying to see where tomorrow's going is I have a little program called Vantage Point. Okay. And every afternoon at 4 o'clock my time, I run it and see where it says tomorrow's going. And it was predicting today's large move down yesterday at 4. So that's what I do for my peak to tomorrow. Besides, of course, my sunny bands, which is how I trade, is with looking at the sunny bands. And I got on the Japanese yen, I got a buy signal back in July the 6th.
Mm,
Yeah, I noticed back in May, when we had that last drop, the day after the red bar, the low the prior day was at 41.40, and the low the next day was 41.16. So it's about
Yeah.
25 points lower, and the close was about the same. So that's what happened in May. So that was a 25-point lower than the low the following day, and a close that was pretty much in line with whatever today's close is. And
right, but it also closed it produced a green bar.
that's what
And
I'm
I
saying.
think,
Yeah, yeah. So if tomorrow
for
we gotta,
me,
yeah. Mhm.
I kind of look at, again, because I use Elliott and I use Fibonacci, and on those lows that you're seeing in May, and then again at the end of June into the beginning of July, both of those had zipped down. They smacked support. Then they exceeded the support, and then it was like somebody flipped a switch, and the buyers came in with such strength. So for me, it was that it completed the correction that I was tracking. And so the next move, because the rally was still on, and in fact, even though we're heading lower and then we're seeing some more serious downside, it's not breaking any of the support levels that it shouldn't. In other words, to give us the clue that this market that's it. Those highs that we saw at 42.84, that's it. We're not getting any indication from the market, from the chart. I'm not anyway, that stays in place. I'm only getting indications that it's dropping in a corrective pattern, and this is the levels that you come to. And when it's done, watch the buyers come roaring back in.
Yeah.
And I think that's what's going to happen again, because that's what we've seen. That's what happened at those two other levels. You're right. It breaks the channel, comes down a little bit below, but it can't stay there.
Yeah. Well, we'll have to see. Like I say, that's the theory of what may happen, and then we're going to have the evidence of what is happening by tomorrow.
Exactly.
And I'm big on
And
evidence. I'm big on evidence.
We have to be, right?
Yeah. So anyway, the time before in March, it didn't make a lower low than today. And again, the next day it closed about the same as where it closed
Right.
for today.
Right.
There's a lot of support on that chart also at 4,200 on the S&P. So it wouldn't be
Yes.
too shocking if they do dunk it one more time and then bring it back up. So I think
And you're
tomorrow,
right.
boy,
And
tomorrow's going
that's
to
a
be
good
fascinating.
point.
Mhm.
That's a good point, Jim, because I think they could, but it's like, as we say so often in here and these discussions, they get it down to that 4,200 level and they dip it below because it scares the crap out of the kids.
Yeah. What you want
And
to
then
find
they
out is if
all
there's a
dump.
net. You want to find out if there's a net. I mean, the bottom line is you don't want to come in catching a
Right.
falling knife. What you'd like to do, if you
Right.
could, is find out that there's a net. Is the net today's low or is the net tomorrow's low? But wherever that net is, then you can act accordingly. But if you run in here thinking the net is here because our theories are what they are, and we find out that we're going to 4,100, that's a painful lesson that,
Right.
theory is
I
one thing and
agree.
real money is a real money, right?
Real money is the real money. You're absolutely right. But I think that if we start to break 4,200, I hate to tell you,
Oh,
the
we don't
next
want to hear
level,
that. Yeah.
I know, but the next level would be 4125 down to 4100.
Yeah. Like I
And
say, you can
again,
really see these Bollingers have been very effective, as you pointed
Yeah.
out, which is, I think this is great information for people to take a look at, because, again, right now you're grasping for something to hold on to. And
Right.
tomorrow
Right.
is the day to hold on to, because tomorrow you definitely would like to see this thing close at least somewhere around where we closed today. If not, then I think, the jury is going to be pretty interesting. Let's switch over a couple more things here, and then because we're going to run out of time. Inflation, I think we covered that a little bit, but let's, John, give a little idea on what your inflation outlook.
Yeah, well, again, as we've been talking, that's really the $64,000 question: is it transitory or not?
Right.
The Feds are talking it down. I think looking ahead, some key things to keep an eye on: the Jackson Hole meeting on August 26th through 28th.
Right.
That's going to be a key point for what the Fed's going to be. You know, they're talking about, the interest rate hikes in 2023. Any kind of fear there with rising interest rates is obviously going to change this whole picture. So I think on a big picture level, inflation is the key to this entire thing.
Right.
Because if you look at any of these kind of things, the longer term valuation indicators, this market's wildly overvalued. You know, the Buffett indicator is 87%. It's higher than it was during the internet bubble, and the reversion to mean, all those things, you know. So any kind of a pop in that balloon, which would be interest rates, that'll be a change of the weather, you know, for
Yeah.
sure.
The only thing really saving this thing now from probably a real big accelerating thing to the drop is that the interest rates dropping, yields dropping,
Yep.
is helping valuations,
Yes.
which are ridiculous. But anyway,
Yeah.
inflation.
And if you know, then earnings, I think, you know, people are still looking at, we're just getting into earnings season here, and that's going to be the short term factor. So
Yeah. We're definitely going to beat. Obviously, you're comparing them against, you know, a lockdown thing. So we're going to definitely beat. The question is that, you know, what's the forward-looking stuff? And, you know, if you look at the transportation average, you know, those companies seem to be hurting. If you look at some of these other companies, they seem to be slowing a little bit. So it'll be interesting. But Michael, how are you feeling about the inflation outlook?
I actually, excuse me, I think that inflation is for real. And I think that the Fed, while I understand what they're trying to do, I don't think that, and they certainly have the experience as the governors, they have experience in dealing with this, but I think they're trying to play it against what how the market's going to interpret it. And I think that that's really part of their mistake, because I agree with what John said, and I agree with what Sonny says, that the market is just so overvalued right now. They pushed and they pushed and they pushed. And the bottom line is, it ain't done pushing. So I think what can happen is, as far as equities go, inflation is for real and it's going to continue, but the market's going to ignore it. And so the prices, the equity prices are going to go up because, again, as John said, and that I say in my own updates, that we are walking into this week, the big tech reporting season. And like you just said, they're already anticipating somebody's going to blow the doors off. Right now, that anticipation is sitting with Apple and Amazon, but it can go to Google just as quick. So we've got these big players. And here's something to just bear in mind. Here we are kicking the pants out of the longs here, and NVIDIA's up $24.
Yeah, well, again,
So
NVIDIA dropped from 835. I mean, 835 to 714. You think anybody short that thing? You think anybody made any money during that drop? So they're trying to take their money too. Yeah.
I hope so. But again, you know, I just think that these are the factors. And so when we're talking about you know, inflation, it's like, yeah, it's real. Yeah. And anybody who has to go to the grocery store or goes and buys gas in the state of California, it's just like, I'm sorry, inflation is real.
Yeah.
How we deal with it, that's up to us, but it's real. And to think that the Fed is going to start to lower rates against that would definitely spin everything right out of control.
Yeah.
So,
well, I mean, you know, like I say, I think they're not going to ease, but that tapering process will be extended further if you start looking at $55 oil and a 20-cent drop in your gas price. And if you started looking at wages totally leveling off because everybody came back to work. And if you started looking at the technological changes where these operating leverage, you know, the companies don't need as many employees. So again, their profitability because of technology is tremendous. And I think Sonny's a big believer in that.
Right.
Yeah.
Well,
yes.
I will not to interrupt, but I will add that the Elliott wave principle, which is my main factor that I do use and have used and have continued to study, is that it does not take into consideration any fundamentals. It doesn't take really into consideration that inflation is the culprit or deflation is the culprit. It doesn't take any of that in. It just lays it out because it's really based on human emotions, human behavioral emotions and their interaction. And so that's really what's coming up. So there's enough people out there that are now getting a little bit worried about where their investments is. Will the market continue to go up? what's going to happen to interest rates. Right now, they're seeing interest rates, stabilize and actually yields go down. So they kind of like that, but that's not helping the market at the moment. The Dow's still down 900 and the bonds are up 2.
Yeah. In other words, that 60-40 portfolio is not helping because you can't
That
take
60-40 portfolio
50,
is
you can't
definitely
take
not.
40 gallons worth of water in and take 1 gallon out and still have no flooding.
Exactly.
All right, Sonny,
Exactly.
you are a stock person, so we got a few symbols here, and I got to bang them out in about 5 minutes. So we can do a little rapid fire here. AMD, Advanced Micro Devices, actually up on the day today. So
Well, it's up, but it's down. It's got a green bar, but it's really down lower than it was.
Yeah.
So it hit another low and now has turned around. It's going back up. So that's kind of an artificial up in to my way of seeing it.
What about
1, 2, 3, 4? We're waiting for a 5th wave up, though.
Okay, so
Yeah.
you think down here it might be reasonable support?
I do.
All right, let's go to the next one. We'll stick with Sunny so we can bang out these a little quicker. General Motors.
You got a chart for me? General Motors. Well, General Motors is working on some of those electric vehicles. So I think they can pull it out if they introduce those and compete with Tesla. And we're hitting there's a lot of support right there where it is right now.
Yeah.
And if you look back at all the preceding lows, they're all making a nice support line right there.
So you think it might
We've got a trend line going down.
I heard something interesting about GM the other day.
What?
They, see if I remember this correctly, they entered into some kind of agreement with a mining company to set up one of the first lithium mines in the United States within the next few years.
I saw that
Wow.
too. Lithium batteries.
Yeah,
Mhm.
most of the lithium is produced in China and Australia, and
They'll probably get government funding for that one.
Mm.
yeah, maybe. But,
I
Viacom
think
was
the
okay.
biggest problem with electronic vehicles is they don't go far enough. That battery doesn't last long enough.
Right.
But if I can get 350 miles out of my car in a trip, and then I have to fill up with gas, which takes me 10 or 15 minutes. If I could go that 350, 400 miles in an electric car, and I had battery stations everywhere that I could plug into for 15 minutes, then we've got some competitive vehicles. But until we reach that milestone, we're still looking at pie in the sky kind of, wouldn't this be wonderful ideas, but people don't want to buy that exclusively.
Right. What are we thinking about Viacom? It was supposed to be the last property or one of the last properties for people to take over, but not only have they not taken it over, the stuff's tanking right now. So what do we think about Viacom? I think you said once before, Sonny, you didn't like this too much.
I don't like it too much. I
Looks
don't like it. That just looks like a Bitcoin run up to me.
Yeah.
Or a one of those
Anything.
Reddit kind of things.
SPAC or whatever. Yeah.
Mhm.
Let's go to the Ford Motor Company. To be frank, there is definitely some losing of altitude in these automotive companies. GM's on the defensive, and this one's really giving up the goose a little bit. So do we think there's a low here to be had on Ford, or?
Well, look at that horizontal line across there. It looks like that could be a bouncing point too, right on that same one.
Right.
Same area that it was on the other one.
Yeah.
In GM.
With regards to SOFI, SOFI, what's that one going for? SOFI Technologies.
Hit another low at what I call a tractor. 1, 2, 3, 4 other. This is the 5th touch of that horizontal line. Should go up from here.
Yeah, it's definitely been sold off, so you would think they're running out of some sellers down here.
Well, they ran up on high volume, and the volume's been decreasing. So that's
all right. Let's go for one. Let's go for one last one. Moderna, which was bid up tremendously, and everyone was saying it might be a little too high. What's it doing today? Nope, still up on the bicycle. $23 higher. So these guys are definitely on the run.
Well, they're the savior of the world these days, right? I mean,
Yeah.
Right.
whatever you think about the vaccine, these guys have the way out, you know.
Right.
I think last week was announced too that they're being added to the S&P 500.
Yeah, that's right. Yeah.
That's
They're
good
added
reason
to
to
the,
go up right there.
yeah, there you go. They're added to the index. So everybody has an index deal, has got to put them in their deal. And that's, it's almost like the split. They run up for the split reason. And
Yep.
then the next thing you know, the rugged, whatever this thing is doing before they're added, I'm sure when they're added, it might very well be sell the fact, huh?
Yes, I would
Yes.
agree with that.
Yeah. Could
Yeah.
be a good thing to monitor to find out if there's any put opportunities at some point.
Yeah, I like that idea.
Yeah. Same thing with Apple when it ran up to 145 pre-split last year. Same thing with NVIDIA running up to 835 pre-split this year. And so that kind of thing.
Yep.
We are coming up to the top. So let's go over what we're going to be talking about this week at our broadcast for our favorite indicators. And so, John, you've got a show coming up. Anything you want to preview on what you're going to cover on your favorite indicators broadcast?
Yeah, sure. I'm a standard moving average guy. Plus, I like the Ichimoku cloud, which is more of a Forex thing, but I think it works great in this environment as well.
Sure. Okay. And make sure people tune in to get that. That's good information. Michael, any a preview on what you're going to be covering? The broadcast?
Yes, I am going to be covering again because my favorite tool remains the Elliott wave principle.
Sure.
And so I'm going to be going over that and how I use that in conjunction with Fibonacci number sequences to monetize and support day trading. And because the beauty about Elliott is that they're building blocks. So what I see on a hourly chart can be broken down to very tradable time periods because I use a 1, a 2, and a 5 minute chart for day trading. So I'm going to be talking about that, and then also about my new ebook.
Okay, perfect. And Sonny, what are some of the things you're going to be covering? I know you've got a tremendous amount of indicators that you're going to cover, but to just whittle down for a couple, 3 of them, what do you think as a preview?
Well, title of my little presentation for tomorrow is "What's my favorite indicator? The one that makes money, the one that works." So that's really, I'm just in it for the money. I'm not in it to be right. And my DMA-H, dynamic moving average histogram, which I invented the dynamic moving average because I found years and years ago that the thing that kills all traders is whipsaw, and this is my mathematical attempt to eliminate whipsaw. So I just trade what the dynamic moving average tells me, and I trade like Michael, but I trade on a 1 and a 5 minute chart.
Gotcha. And Sonny, you make a good point about whipsaw, because before we had this lineal move here today, we went through a number of days in the first 2 weeks of July where every time you bought strength, you got nailed. Every time you sold weakness, you got nailed. So that's a perfect example of what you're talking about. And that's why your indicators might smooth that out so you don't end up with whiplash.
Exactly.
All right. Option Professor will also have a show which will cover all the stuff we cover in our newsletter. Right now, what I'd like to do is turn it back over to David to wrap it up. And thank you, John, Michael, and Sonny for being here. I think we gave a lot of good information out. And I think one thing we're going away with is let's watch these prices for tomorrow. Let's see if they can hold up. Let's see where they close. And if you get a decent close and it looks like that 4,200 is held, you might have a case to be built that you can buy something down here.
Thanks, Professor. Fun like always. Sonny, nice to meet you again. And
Nice
David, thank you.
Thank you all.
Yeah, as Jim mentioned, we are going to be doing a favorite indicators event starting tomorrow at 10 a.m. Eastern time. And so that'll be 10 presentations tomorrow and 10 presentations on Wednesday. So Sonny and John will be on tomorrow's group, and Michael and the Option Professor will be on Wednesday. But yeah, we have 20 hours of indicator education. So 10 presentations each day. So it'll be a nice big event. And yeah, for everyone listening, you can always go to TimingResearch.com/live to get access to the live event, or I've posted a link in the chat, or if you're watching the recording, there'll be a link in the show notes. So yeah, be sure to join us. It'll be a huge event. So, and then also, of course, all the recordings will go onto the TimingResearch.com homepage as soon as I can get them posted. Also, if you subscribe to Timing Research on YouTube or your favorite podcast app, you can get the recordings there as well as soon as I post them. So I just want to thank my guests again for today. John Nyaradi of TradingGods.net, Michael Filighera of LogicalSignals.com, Sonny Harris of MoneyMentor.com, and the Option Professor of OptionProfessor.com. And be sure to join us tomorrow and Wednesday for all the presentations. So thanks, everyone.
Thank you.
Thank you, David.